Confused about where to invest your money in the stock market? Large cap, mid cap, or small cap? What if you didn't have to choose? Enter the Flexicap fund. Think of a Flexicap fund as the all-rounder of mutual funds. It gives the fund manager the ultimate freedom, the flexibility to invest in companies of any size. They can focus on stable large caps, hunt for growth in mid caps, or tap into the potential of small caps, all within one single fund. So who is this for? A Flexicap fund is ideal if you're a long-term investor aiming for growth over 5 years or more. It's also a fantastic starting point for beginners who want a diversified portfolio without the headache of picking multiple funds. The biggest merit is adaptability. The manager can play defense with large caps when the market is shaky and go on the offense with smaller companies when the opportunities arise. This offers great growth potential while spreading out your risk. But there's a catch. The fund's performance is heavily dependent on the fund manager's skill. Their expertise is key, so a wrong call can impact your returns. Always check the manager's track record. In short, a Flexicap fund offers a flexible, one-stop solution for long-term growth. Found this helpful? Hit that like button and subscribe for more simplified finance concepts.